Well, good afternoon, everyone. Welcome. We're pleased to have you today. It is October 20th and 2 o'clock in the afternoon. This is a NACo County Tech Exchange webinar, and it's focused on cyber insurance. Love the catchy title is Cyber Insurance Coverage Holding Local Government Ransom. And this is being recorded today. So I just want to share a few housekeeping items with you before we introduce the speakers. So on the next slide are a few housekeeping items. First of all, I want to make sure you should be coming in muted, and we're going to have a great attendance today. We have over 150 registered, and right now we're pushing 70 that are already in the meeting. So just make sure that you're muted, and we do want to encourage you to ask questions. And so feel free to, if you already have a couple questions in mind about cyber insurance, please feel free to go ahead and post those in the chat. The other thing we would ask, if you can, if you click on your name, you might have the option that says more, or it might be just 3 dots, and in the rename option, if you can make sure your name is there as well as the organization that you represent, that would be great. It just helps all of us to know where folks are coming from. If not, that's fine as well. So we are going to get started, and I'm excited. Unfortunately, there's a lot going on with cyber insurance these days, and I'm excited to share some of the information that we have from what I would call experts in the industry. And I want to introduce the speakers to you, but before I do that, and I was going to say, that's fine, Brittany, go ahead and put them up on the screen. Cyber insurance premiums have become an issue for local government. I've been hearing this since probably about June, July, but now even more so, constantly getting emails and having conversations with county CIOs and IT directors that pick one. My premium doubled, tripled in some cases, and in some cases, we were just going to procure cyber insurance for the first time, but we're finding limited options when it comes to providers. There are some major providers that have decided not to offer cyber insurance coverage to local government. And so that's a problem. And then the additional area, it shouldn't be a problem per se, and it's not unexpected. And that is more requirements for security minimums are on the table now in order to control your cyber insurance premiums. So with all those things in mind, we're going to hear from some experts today, as well as from the counties as well on the current situation, and is there anything we can do in the meantime, apart from maybe what we can do at a national level or even at a legislative level. And I'm going to go ahead and turn it over to our speakers, let you know that we are privileged to have Tim Oliver. He is the CIO for Horry County, South Carolina. Adam Bobrow, he is the founder and CEO for Foresight Resilience Strategies. And we're going to hear from him later in the day with a new tool that they've been working on with the Center for Internet Security. Matt Mead, who is with Eckert Seamans and an attorney. I've known Matt for a number of years. He has a lot of experience with incidents and cyber in general. And then Robert Rosenzweig, who is the Senior Vice President for Risk Strategies, is going to share some of the risk observations and his perspective in the industry itself. So Tim, are you ready to get started?
Ready, Rita.
All right, so we're just gonna unshare the PowerPoint. We don't need to keep that up. And Tim, we're gonna make you front and center. And I know we're gonna start the conversation with sharing what you're seeing and your experiences that you're having with cyber insurance these days.
Yeah, it's good to be here, everyone. I think from a county perspective, we're all facing the same things these days. As Rita mentioned, the prices seem to be going up, availability seems to be going down. I don't know about you, but the last questionnaire from multiple companies was almost as bad as filling out the NCSR questionnaire. And what one provider requires is different from another provider, understanding that they're all looking at something different. And then to make matters more complicated, we're finding out this year that our bonding agencies are asking about our cyber insurance and our cyber policies. So it's becoming a full time job managing cyber and a team. And we have varied sizes of counties because Horry County, while some people might consider it a large organization, we still only have 35 people in the entire IT department supporting almost 3,000. So you go from one end of the spectrum to the other. So we're going to be asking Matt and Robert just a couple of questions to start the conversation off, because that's what we're seeing from a local government standpoint. It's costing more and it's getting more complicated to obtain cyber insurance, and so much more is being tagged onto it. What are you both seeing as things that are impacting cyber insurance premiums? Matt or Robert, either one of you can start.
I can start, and Matt, feel free to chime in and build on it. Let me quickly just introduce myself, or reintroduce myself, since Rita was kind enough to at the top. But for those of you who aren't familiar with Risk Strategies, we are a leading specialty insurance brokerage. So I run our national cyber practice, and we work with clients across all industries, counties and municipalities included, in understanding what your risks are around data security and privacy, implementing strategies to reduce risk, but certainly a lot of our time and energy is spent negotiating and securing coverage for our clients in the marketplace. So, I would start by giving a general overview of the state of the market at the moment, which certainly aligns pretty well with those two high level observations that Tim shared a second ago. We are in an unprecedented hard market cycle for cyber right now. There are some macroeconomic factors that are impacting the insurance industry as a whole that have firmed up pricing across all lines of insurance that you might be buying for your counties. But the severity that we're seeing with cyber is far more significant than on any other lines of business. There are a few reasons, the two most fundamental reasons that I'd call out. Over the last 24 months, both the frequency and severity of ransomware attacks has grown exponentially. If we were having this conversation 5 years ago, that the type of attack threat actors were engaging in were more frequently brute force attacks, business email compromise. Ransomware wasn't their preferred attack method. But in shifting to ransomware, that has diversified who their targets are, because they no longer care what industry their target is or how large they are. It's all about gaining access and then extorting a ransom payment. So it's expanded the attack surface, and it's also made the average dollar costs of these claims probably go up in the neighborhood of 10x. So what might have been average claims payouts for the industry of 100,000, 200,000, 3-4 years ago are now 7-figure claims when we're talking about a ransomware incident. The other main issue that I would cite that's driving a lot of concern in the marketplace is the threat of systemic risk. So many counties, many businesses, and other industries are all using a lot of the same cloud providers, SaaS providers, and the potential impact that could have on the insurance industry and the economy as a whole if that cloud provider was hit with a single attack that spread and impacted multiple municipalities or counties that use the same technology. I will just make one last comment and then hand off to Matt here. The cyber insurance product is one still relatively in its infancy in the insurance industry. It's only been written since the early 2000s, so we're about 20 years into its life cycle. So it's not as if the insurance industry has hundreds of years of actuarial data in the way that we do about lines of insurance like property. So there certainly needed to be some correction. The cyber market had gotten to a point 5 years ago or so where you could spell your name, you could just about secure cyber insurance, and underwriters weren't necessarily asking the right question or pricing for this accordingly. So, in this hard market, not only are prices up, carriers are looking at other levers that they can control to manage their risk. And that's pulling back on certain elements of coverage, but that's also being more qualitative in their underwriting analysis and asking smarter questions, which certainly creates some frustration and friction for you all as the buyer. But in order to make this marketplace sustainable in the long term, a lot of this was needed given the trajectory that the cyber insurance market has had thus far. So I'm going to throw a lot out there. So I'll pause there and hand it over to Matt.
Sure. Thanks, Robert. And, just to reintroduce myself briefly. So as Rita said, I'm based in Pittsburgh, Pennsylvania. I have been handling cyber incidents since as far back as 2003. I practice exclusively. About 80% of what I do is helping clients manage and respond to cyber incidents. The other 20% or so is proactive work, helping with training, helping with policies and procedures and things along those lines. I've been working with counties across the US since about 2016, and I'm very familiar with some of the unique issues you all face, both large and small counties. And it has been a great working relationship helping counties manage these types of incidents. Just to build on some of the things that Robert said. So what I definitely am seeing right now is a large number of ransomware attacks. And it really doesn't matter if a county is 10,000 people or 150,000 people or 1 million people. Counties are getting hit by that. And the dynamic in the ransom world has even evolved. So Robert's right, 5 years ago, we weren't really talking about ransomware. 2 years ago or so, right prior to the pandemic, we were talking about ransomware, just encrypting files. And what we were talking to clients about then in both the public and private sector was make sure you have good backups, make sure you've tested those backups, and make sure you're able to recover backups. What has changed since then is having backups is not enough because the threat actors have upped the ante. They are now, even if you have good backups and refuse to negotiate with them, they are publishing those documents, having walls of shame on the dark web and sometimes in the clear web, in disclosing information they have may remove for your county. So that adds another equation to it. What is the reputational harm associated with the release of data, even if you have good backups in the connection with a ransomware attack? Robert also mentioned this sort of systematic issue about cloud providers and things like that. I've been working on a couple incidents for counties in different states recently. And one that was interesting, the one common vector was a vendor that 3 of them used, and that vendor phishing emails that originated from that vendor, and each of my 3 clients had clicked on that particular vendor's phishing emails, which led to this particular incident. So I think a really important, and I know we're going to get into this later, is while your house may be in order from a cyber perspective, what are you doing to look at, understand, and assess the cyber hygiene of the vendors that you entrust some of your most valuable data to? It's extremely important to have strong contract provisions so that you at least get their cooperation in the context of a cyber incident, but also to make sure that they are protecting your county residents' data in the same way that you do.
Thank you, Matt and Robert. I think you hit on a couple of excellent points. One is, especially as we're looking at the chat and seeing the size of the counties and the organizations that are attending today, the small county shouldn't think that because they're a small county that they're not a target. Small county, big county, we're all the same risk, really, especially when you talk about encrypting data and not wanting the ransomware to unencrypt it, but to prevent putting the data out on the web. I know a small county neighboring to Horry County was hit last year, and it was devastating for them what it took them to recover. And then the other point that you mentioned was the vendor relationship. And vendor relationships are extremely difficult these days for counties, especially if they've been in long-term contracts with them. And then, of course, the vendors don't like to share their security posture either, even with their customers. So, ongoing issues. So, another question is, what can counties do to maybe not control, but maybe it is control the cost of those premiums that are associated with it? And does that coverage vary from county to county or provider to provider? Robert or Matt, either one of you?
Yeah, I mean, I guess just a couple things. One clarifying point to start, and as much as I would like this not to be the case, insurance carriers in the marketplace have to think about their underwriting on a portfolio basis. So while no industries are immune from some of the correction that we're seeing in the marketplace right now, counties and municipalities have undoubtedly gotten hit the hardest, or pretty close to the hardest. And that's a function of just historical loss experience as an industry being adverse relative to other industries, whether that's been your individual experience or not. So we are kind of swimming against the tide and have some headwinds we've got to deal with in that regard. But there are a number of controls that underwriters are increasingly becoming more focused on, and it has been our experience that if we can demonstrate that our clients are best in class within the industry that they find themselves in, there is still strong comprehensive coverage to be found in the marketplace, and we can at least ensure that the price increase that we're seeing is at the lowest end of that spectrum. So I would call out a couple main controls. The number one control that is pretty impossible to get around these days, and 95% of the carriers in the market, is having multi-factor authentication implemented enterprise-wide. And that means for remote access, webmail, any cloud-based applications, and for all users, regardless of their level of privileged access. If that answer is a no, it is pretty much a disqualifier for coverage from most carriers in the marketplace. The rest of the ones I will quickly call out in less detail are not as binary. There is room for a conversation here, but I would list out the rest of the top 5 as having endpoint detection, monitoring, and response tools on all endpoints on your network. Ideally having a 24/7 security operations center that's monitoring alerts kicked off from that tool. Regular security awareness training and phishing testing. Having a good strategy around backups of data. So both how frequently those backups are being generated, and are they encrypted, and are they stored offsite and air gapped from the internet? That's a really important control, given that ransomware is the number one type of attack that we're seeing, because having good backups that we're regularly testing, recovering from, can eliminate the need to have to even engage with the threat actor and consider paying the ransom payment. And then last but not least, and this one I'd say is we're seeing more scrutiny around this in the last 30 days, is having what's called a privileged access management tool. So just another layer that protects the credentials of users that have administrative rights in your network, so that if for some reason the threat actor is able to get in and get around the multi-factor authentication, we still have another layer of defense that could prevent against a threat actor from getting those elevated administrator credentials and wreaking more havoc.
Well, Robert, Tim, if I could interject here, that's a tall order. So I know, as from the NACo perspective, we have our 11 priorities, and all of these are on there in some fashion when it comes to cybersecurity priorities. But the MFA one, we've said to counties, start somewhere. If you don't have multi-factor in place, start with your user accounts, your end user, and build from there. But you're right, it's not just the end user, it's the VPN, it's access to hosted applications hosted internally, applications hosted externally, some of which and are owned and managed by other providers where MFA might not be possible. So, and I want to ask the question, and it gets to a question earlier that I saw in the chat. Are they, and I'm looking for it again, I apologize, I lost it here. Can cyber insurance be based on level of risk reduction versus size? So like if I'm a county and I have MFA partially implemented, am I going to be completely denied?
I would say, unfortunately, in this market, I mean, listen, it's not black and white. I mean, there is some ability to push carriers on this, and I'm speaking again in generalities here. I can't speak for every single insurance carrier in the marketplace. That would be the one control that underwriters are almost across the board viewing as table stakes, because at the end of the day, that is the best example of a control that's like not having a lock on your front door. The view is the threat actors are going to get in. If you don't have MFA, having MFA doesn't mean that you'll never have an incident, but it's going to dramatically decrease the chances and also lower the cost and complexity of that incident. And there's enough data now that underwriters can correlate the vast majority of the claims they're seeing back to companies that did not have multi-factor authentication enabled. So, what we've been able to do in some cases is maintain cover while our clients get on the path to implementation. But if we can show that the MFA is there, even if everything else I listed out isn't quite there, underwriters are willing to be partners here and provide some resources and education and discounts to help their customers get to that path of full compliance, which is ultimately going to be a win-win for everybody.
Well, and I appreciate in the chat on monitoring that, and that's the experience of some of the counties as well. If there is no MFA at all, then you definitely are looking at denial. And if it's in process, I think maybe there's maybe a little bit of give there. The other question, and then Matt, we'll let you weigh in here. Tim, I didn't mean to hijack the conversation. I just want to share what's in the chat. Is there a list of questions that counties should be asking the insurance company when it comes to cyber insurance? Because we know, and we can save this question for later if you want, but we know cyber insurance is not the same from one provider to another.
Do you want to take that, Matt, or do you want me to just kick it off?
I mean, I guess before I answer that, I just want to address a couple of things that Robert, you two were just talking about. So couldn't agree more on MFA. My own personal experiences, the overwhelming majority of county cyber incidents that I work on are caused by the failure to have MFA. So I can definitely confirm that. The other thing I would say is if you are implementing MFA, as much as elected officials have a lot of sway in your respective counties, avoid the temptation of which I have heard many times. The mayor doesn't want to have MFA. It's too much of a hassle. The county commissioners don't want to have MFA because it would really cause a problem in their day-to-day. Everybody has to have it. If you start having selective MFA because somebody doesn't want to be bothered by it, trust me, that's the threat actors look for the weakest link and they will find that particular person to go for. On endpoint monitoring, I had a recent incident in the private sector where the client had outstanding endpoint product in place called SentinelOne. They were able to detect attack, and because of the logging files that SentinelOne had in place, we were able to see exactly where the threat actor went in the network. First of all, ransomware didn't deploy, but second of all, we were able to see exactly where they went. We were able to review all those files and determine there was no breach. So having something like that can be a great resource for any client in both the private and public sector. I think that's really, really important. As to questions to ask your insurers going in, I mean, I think, it's extremely important to find out some basics. This is less away from some of the things that Robert listed out, but does your coverage provide for crisis communications assistance? If you have a massive data breach in your county or a massive cyber incident, there's all likelihood that the local media will be reaching out to you, especially if it's election season. And so you don't want just you want somebody with experience in handling crisis communications and cyber matters available to do that. So does your policy provide for that? Does your policy allow for provision of credit monitoring? If you're notifying 1 million people, will they pay for a call center to be set up? All kind of basic things, but things that you should understand in advance of signing up for any policy. The folks that I work with, it's usually a bundled suite of services, so that the cyber forensic investigator, your attorneys, the credit monitoring that may come with any breach notification letters, the mailing costs, all those things are bundled in. But again, you need to find those specifics out in connection with your particular policies.
Yeah.
Well, go ahead.
Sorry, go ahead, Tim. No, go ahead.
Robert. No, I was going to ask another question, so you go ahead and comment.
Yeah, I mean, nothing major to add. I mean, I agree with Matt there, and I would just say, and this is not intended to be a plug here, but the onus should be on your broker. You need to be with a specialty focused insurance broker that's got the subject matter expertise that can do that qualitative analysis to tell you the difference between carrier A and carrier B. It never was one size fits all in terms of what carriers were offering in this marketplace. It's not a standardized product like you might see in other lines of insurance where every carrier is using the same policy form and it's just different capital behind it. Every carrier's got a differentiated offering, different wording, different services, different vendors that they utilize. So there's a lot of variables that need to go into your decision-making process. And now layering on top of that, a market that's undergoing some challenges, you've got to have considerations around some of the creative structures carriers are trying to employ to reduce their risks. Things like sublimiting coverage for ransomware or co-insurance provisions, which we can get into or not, but all different complications that make comparing quotes from two carriers all the more of a process.
Yeah, and I'm one quick question. One thing I should have added to that too is, what coverage does your current cyber liability insurance provide for payment of ransom? So I'm seeing with some counties 0. I'm seeing 50,000 or 100,000. Then I'm seeing unlimited, subject to approval of the broker. So again, that's an important question. If you get hit by a ransomware attack and you are going to lose critical county data or critical data to your organization, or in a worst case scenario, critical data that may be important to providing healthcare services to county residents, what is your insurance company willing to pay for that? And I just saw, Rita, I did see one quick question pop up on the chat about including within your incident response plan the name of your insurance company and the broker. Absolutely. I mean, that should be one of your first calls if you get hit by a cyber incident, is to pick up the phone and call that person so you can get subject matter experts engaged right away. I often see counties and private sector clients get in trouble because they think they can handle it on their own, and they go a few days and it escalates and gets worse.
All right, and Matt, do you want to just elaborate a little bit there in terms of the cyber coach, or whatever you want to call it, bringing in an attorney early in the process from that attorney-client privilege perspective?
Yeah, absolutely. I mean, once you engage an attorney and start talking to a breach coach or something like that, the communications will be protected by the attorney-client privilege. If you called me tomorrow, my job is to provide legal advice to you. So any information that we're sharing would be in the context of that attorney-client relationship. The other thing to keep in mind is, if you called me tomorrow and said our county was hit by a ransomware attack, my first job would be to go out and hire a forensic investigator to help, who would be in charge of the investigation of the incident to find out the cause, but also more importantly, to help me determine whether or not there is a breach reportable under state or federal law. I can't do that without the forensic investigator. So that's why my law firm would directly hire the investigator, not the individual county, so that investigation would be protected by the attorney-client or work product privilege. There have been some recent cases that have tried to attack that, but we're still taking the position that if I hire an investigator to do this work, it's to help me provide you with legal advice.
So one of the things that also I think is worth mentioning here is it came up in a conversation we had in preparing for this, with so much emphasis being put on, especially local governments, to move their operations to the cloud. Some vendors only beginning to have cloud SaaS offerings that they're offering or that they're wanting to migrate their county customers to. I think it's interesting to note that the comment that was made is we're the ones, our county insurance is responsible for much of that, even if the breach was on the vendor. Can you address that issue of even the contracts and third-party vendors, what that relationship is if our data is in the cloud and they're the one that was attacked?
Well, Tim, I think you hit it on the head. Unfortunately, it's your data. So depending on what the contract provisions are, I mean, it's going to be your obligation to notify those county residents and those individuals whose data was impacted. Down the road, you may have indemnity rights and provisions within that contract that allow you to collect and recover from that vendor who's responsible for the breach. But again, that's why I made that first comment about knowing your vendors, having strong contracts in place, and making sure that at the very least, if they experience a cyber incident, they're obligated to notify you. And more importantly, and Rita, you and I have worked on one of these, that they're obligated to cooperate with your investigation. You're sort of at their mercy, and they need to be able to provide you that critical data so you can get information out and notification out to your county residents.
Absolutely. That it's again, in this whole conversation, I think it's important to remember that ultimately the county is going to be responsible for their data and making sure that we want the third-party providers to follow those rules and guidelines. And as we know, and not even just guidelines, really minimum standards now, that doesn't always happen. I would like to call on Robert Peterson, if you wouldn't mind. You have a question in the chat. If you would like to ask that directly of Tim, Matt, and Robert, that would be great. So Robert Peterson, you there? Excellent. You're on.
Yes. Okay. I was just wondering, we're looking at implementing an advanced EDR service in our county, and we're a small county in Idaho, about 10,000 people. I'm the only IT person in the IT department right at the moment. And so I was wondering if the EDR service sees something happening and they back it clear out, what are the requirements for reporting to the insurance carrier and so forth? That's my question.
I can take that one. So to backtrack for 1 second, I would level set and I would share with you that generally speaking, the triggering event, if you will, what would constitute a claim under most cyber policies in the market is the actual or suspected unauthorized access to your systems or data that's in your care, custody, or control. Cyber insurance, even with the challenges in the current market, is not like automobile insurance in that if we over-report, we run the risk of our rates going up or being non-renewed. There's obviously a number of variables here that would necessitate a conversation on a case-by-case basis. But if we believe there has been unauthorized access, even if it was mitigated and there's not an ongoing threat, more likely than not, our guidance would still be to report to the carrier, because even if we don't need to take further action, it's only going to protect your interests in that small percentage chance that it does turn into something larger. We never want to be in a position where a carrier takes the position of denying coverage for late reporting, and that allows us to hedge against that risk.
Yeah, and one thing I would add to what Robert said, plenty of counties across the US have called me. We've done the forensic investigation and determined that it wasn't a breach requiring reporting under state or federal law. Just because you engage counsel to do an investigation that doesn't mean there's a breach. And then in the end, what you have is a legal analysis and a forensic report that you have in your files that bolsters that you notified your insurance company, you retained counsel, you did all the right steps, and ultimately it was not a breach because there was no evidence of exfiltration of data in some circumstances. And some states, Robert used that sort of buzzword access. Some states require access to and acquisition of personal information. So access alone, while it may trigger notification of your policy, wouldn't actually be a breach.
And then some good dialogue in the chat on that as well, because that's a daily occurrence. And maybe I'm thinking of the proactive showing our insurance provider, hey, we're on top of this. And maybe it's an approach of once a month, here's what we were able to stop and prevent, just to show the insurance carrier or provider that your security measures are doing their job. So it is a balancing act. We want to keep moving here and allow enough time for this demo with Adam. So Tim, do you have one more question, or are we?
No, I think we're good. I think we're good. We should go to the demo.
Great.
With Adam.
All right. So what we're going to do now is.
Hey, Rita, would you mind if I just gave I just want to say one quick thing at the end here. Two
Sure.
really important things. I agree with every step that Robert laid out, but I would add one more. We use the concept reducing the threat landscape. And one thing I see with counties is the keeping of old data that probably is no longer relevant. We had a cyber incident with a business email compromise where there were emails from 2003 in these particular users that were compromised. If there is not a business need or a litigation hold reason why those emails are being retained, take them out, reduce that threat landscape, make sure that those things aren't there, because if you have an incident, you won't have to worry about them. Put them somewhere safe, somewhere that they're not on your network, not on that particular user's email. And then the last thing is, the cyber training is great. Robert talked about that, but do tabletop exercises. Have your incident response team run through hypothetical incidents and see how you work. Because I can tell you that when we see counties that have incidents that have never actually sat down and thought about this process, there's a lot of chaos at the start because the team just doesn't have that muscle memory to understand how to respond to a particular cyber incident. So tabletop's really important.
And I appreciate your comment about reducing the threat. I'll add one thing real quick here. In the work I've done over the years in converting data, in particular case management systems, I saw client information that went back 20 plus years. And the theory, 10 years ago, it might've worked, but we need to keep the historical information because we know some of this is his familial and families stay in the system. But we're in a day and age now where there's got to be a retention policy in place that doesn't necessarily keep all of that old data. So great point. Let's turn to Adam Bobrow now with Foresight Resilience Strategies. I had the privilege of, I want to say accidentally, getting to know Adam, but he's been working with the Center for Internet Security, which many of us know. And Adam has a risk tool that is, and correct me if I'm wrong, but basically is being developed for Center for Internet Security that's being unveiled here in the next week or so, maybe even today. And Adam's going to give us a demo and share some of that you all will have access to, and my understanding at no cost. So Adam, we're going to kick it to you.
Great, thanks, Rita. And this has been a terrific conversation. And I think this is really additive to what everybody, what Matt and Tim and Robert have said up to this point. Exactly as Rita said, our company, Foresight Resilience Strategies, has been working with the Center for Internet Security to build a tool that really relies on some of the excellent work that they have done to give you a better picture of your risk. So you really want to understand your risk, your cybersecurity risk specifically, and what this tool is focused on. It's really an MVP. It gives you a taste of how this type of an assessment would work, is on a ransomware scenario. So just to make this about your county, right? This is looking at your county's exposure. So the tool will help you estimate your county's risk from a ransomware attack using the business impact analysis tool that we've developed. The link here will take you to, you can see the next bullet says coming soon, a page that looks like a CSAT page. On the page, you'll see the CIS CSAT features, and down at the bottom, there's a coming soon bullet. Where that coming soon bullet is will become a link, I'm hoping in the next week, that will take you to the tool hosted by CIS that you're going to see in just a moment. It's very much tied to the CSAT, if you're familiar with the CSAT, because we use CSAT data in doing the analysis under the tool. This works right now, obviously, but if, once the tool is live, and if you're using it, if you have feature requests, you have support requests, you have feedback, especially feedback, we're really looking forward to that. This email address, controlsinfo@cisecurity.org, is the way to get it to the whole team. Our team will see it, and CIS's team will see it as well. Let me walk through a couple of things, because I don't want to have to take you through every nook and cranny of the app itself. The first thing is just to understand the process basics and what we're talking about with risk. So with risk, actuarially, we're thinking about this as impact and likelihood. What happens when it happens, and how often does it happen, right? Our model has been to try and quantify that risk, as opposed to using a low, medium, high benchmark. We try and use dollars and cents for the financial impact that you experience, and a likelihood of a probability measured over a time frame. So like what's the percentage chance that this will happen to me in the next year? Importantly, the financial terms especially has to be represented in ranges, because sometimes you have an incident and it's one record that escapes, and you call somebody and they send it back and it's not that big a deal. And sometimes it's the worst case, it's the bad day scenario that you really don't want. How often, what is the range of impact? So it's not just one thing. Forms of loss. If I say to you, what does it cost if you have a ransomware attack? Of course, you're going to say to me, I have no idea. Like, first of all, I haven't had one, hopefully, thank goodness. Second of all, it's a huge range. I can't tell you what it would look like. If you break it down into bite-sized pieces, you can tell me much more what it would take. If you lost half your network, how much would that cost to replace? If you were unable to run your some of your county services, what would be the impact in financial terms? So that's how we do that's how we break up the questionnaire, that this is basically an interview-based process that allows you to determine what those losses look like in range terms. We also differentiate between the types of losses you'll experience if you lose confidentiality, the data is stolen, versus if you lose integrity or availability, if the data is unavailable. Modern ransomware gives you both examples. Often, our attackers now are taking the information and exfiltrating it and threatening to publish it on the dark web or in public if you don't pay up. Of course, the classic part of ransomware, they encrypt your files and you can't use your systems until they give you a key, you pay the ransom, you have some form of data recovery, et cetera. So you have both types of losses, but obviously the losses can be very different. One of the more modern cybersecurity concepts is the idea of a kill chain. We haven't made a formal kill chain here, but we recognize that in order to have an incident, a series of events have to take place, from initial access through to the eventual incident occurring. If you can make the pathway the attacker, or an accidental, internal versus external, doesn't matter. The pathway to getting to that incident, if you can make it more difficult, you can close off some of those nodes, you're going to reduce the likelihood. And so our model on probability is based on that. And I'll just demonstrate that in just a minute. So hopefully you can now see on my screen the CIS CSAT BIA up in the upper left-hand corner. This is not the page you'll see when you come to the app in the first place. We have a user guide for logging in the first time and things like that. I've skipped straight to the asset entry part. So what you see here is the asset that you're going to choose to analyze. We've done this from the perspective that what you're trying to protect and where the damage comes from is your information assets. If you can't control the confidentiality, integrity, or availability of your information assets, that is when you have an incident. So what we want people to do is to choose the asset for their organization, for their county, that generates the greatest part of their value proposition, to use sort of business speak. The thing that's key and that's most important. There may be many things, and the way this app works, you would generate, and you'd be able, you can see at the bottom, previously created assets, to go through the process for the assets one at a time. In this case, we're calling it XYZ IP. It's intellectual property for a pharmaceutical company. This data is all synthetic, has no tie to any real people, so there's no confidentiality concerns here. You can put sort of free form, whatever information makes it most useful for you to understand the platform and the business unit that's implicated.
So before you go on, Adam, just to if you go back to that screen, for those listening in, what I would look at there is looking at your structured data first. What is what's it like our jail management system, for example, or a human services application, or your payroll system. Those are the specific assets you're talking about, correct?
Yeah, exactly.
Okay.
Exactly. And the information that you're keeping in there that's confidential, whether that's the operational information, the personal information, or whatever information it is that allows you to make those systems run.
Right. Really ties to the whole part I've been preaching for a while. A lot of us are that data asset inventory.
Yeah, absolutely.
Okay.
So on the next page, we have a model of where you can exclude things if they're not relevant. So what you can see here is the overall scheme of this bite-sized pieces. You see losses of confidentiality are featured on the left side. Losses of integrity or availability are featured on the right side. Productivity, responding to an incident, replacing equipment and other replacements that'll have to happen. Legal costs, for example, in this case, not the cost of going to your attorneys, which is really more an asset, more in the response cost, but the cost that would happen if you ended up with a judgment against you or a regulatory agency fined you. Cost from loss of competitive advantage and cost from loss of reputation. These are your 6 categories of loss in the 2 categories of, and what you can do here in the 2 categories of loss of control is you can turn off, if you want, one of the types of things. So the interview will gray that out and you won't have to see it. It just makes things a little bit simpler to have that sort of binary question. Do I have this type of loss or don't? If you don't, you don't have to worry about going into the more fine detailed questions. When you get there, I'll let you read about the sort of how you should be thinking about quantifying losses. That's just an explanatory page. And now we're into the productivity losses, which is our first category of loss. What we've done here is we've broken it down even into more. Well, the first thing to note is there are 3 values here. So what is a minimum material, but not so bad outcome? Again, when this happens, not if it happens, not what am I thinking the index value of likelihood versus probability or likelihood versus impact, but what assume it happened. This is a not so bad day. The most likely scenario is sort of what you think is probably going to happen. And the maximum is your worst possible day. And that's losses specifically to productivity. In this case, losses of permanently lost sales or revenue. This is more the phrased sort for a business, but I think you'll be able to make the right analogies to figure this out. And you can see that these losses tend to be, and when you think about it, this makes sense. They pile up on the left side of the axis. So you have the minimum is very low. The most likely is not really that much more relative to what the maximum is. And if you think about it, like when you have a really bad incident, that tail risk is rather large. And so it does tend to be one of these distributions where you see fewer incidents, but they tend to extend along the axis and be that tail risk that goes way out to the right side of the chart. So
I know there'll be additional trainings on this. Just a quick question. Some of this becomes arbitrary, I would think, to the county interpretation of those dollar amounts. Is that correct?
So our feeling is that the best experts on this are the people who would experience the losses. And so it's sort of pointless for me to tell a county that this is what I think the values would be. You know what your providers cost when you have to do response costs. You know what your revenues look like. You can go out. This does tend to be an exercise that is not something you just run right through. And you will have to go to your other stakeholders in your organization and say to them, how much would it cost us to, if we were unable to, God forbid, answer 911 calls for 3 days, right? Like what would be the cost of that? And you'd have to come up with some sort of a consensus value for that. The training materials that accompany the tool and some of the blog posts will help to answer those questions and put in place best practices for dealing with that.
Got it.
So you can see here confidentiality and integrity availability. You can also see that below this, the numbers are 0. We've offered an opportunity to decompose the losses for productivity and for the other forms of loss into many smaller buckets, but you don't have to, because what happens here at the bottom of the page is that those losses are simply summed up. For the simulation, we consider all probability or all productivity losses together, all response losses together, et cetera. So you don't have to fill these in individually. If you feel that you can make just a overall productivity, and productivity is defined at the top of the page, all the forms of losses are defined at the top of the pages. If you feel you can do that just by itself, you can fill in just one set of the trios on confidentiality and one set of the trio of values on integrity and availability. And then you can see on the side, productivity through the rest of the types of impact. All the pages function in mostly the same way. So we're going to skip to uploading the CIS safeguards. The CIS safeguards are, what you'll do is if you're a CIS controls user and you have a CSAT and you've interacted with the CSAT system, you'll go to CSAT, you'll log into your account, you'll click the current assessment, export your CSAT report. You'll come back here and import it by sort of very familiar, download, upload the document. And then I've already done that, so I'm not going to go through that process, but you click continue and it will take you through where you can confirm the implementation status. And what you'll see is the 42 safeguards within the CIS controls that CIS is identified as an implementation group 1, and the level of implementation that you have reported on that. You can change these if you feel like one of them is no longer accurate, no longer reflective. You can update those things. You can review and see that it is what you have put into CSAT. And if there are any blanks, it will require you to fill them in. So you can, if you haven't gotten a chance to finish that assessment in CSAT, or if you haven't done CSAT at all, you can come straight to this page and just fill in the implementation levels. When you click the next button, it will take you through. And I'm gonna try and do this very quickly because I know we're running short on time. But essentially, when I describe the pathways, CIS has also created a product called the Community Defense Model, which uses the attack framework from MITRE and maps a ransomware attack and other types of attacks, but specifically in this case, a ransomware attack through the attack framework from initial access to impact. We have essentially taken the number of pathways there, associated the controls, which is what this community defense model does, with the different techniques and tactics and techniques in the attack framework. And we've said, if you have the higher your implementation of a control that's associated with one of those tactics and techniques, the more likely it is you've closed down that pathway. So based on that, we've created that creates a model that gives us a resulting frequency that is a likelihood in the next 12 months that you would experience a ransomware attack. The 34% is the number, assuming that basically it's almost 100% likely you'd have it if you had no controls in place. You'd have an incident. You can also, it also calculates for you the likelihood if the naive assumption where you have no controls in place would only be 75% likelihood you'd have an attack, or would only be 50% likelihood you'd have an attack. The 34 is the default value. If you don't put anything in this box, you'll get 34. You can use 26, you can use 17. If your cybersecurity program has generated a number that is, you feel better, you can enter it into this box. I'll leave it blank for now. And it will use the 34%. When I click run report, there's actually a simulation that runs in the background where a Monte Carlo simulation takes the impact numbers that you've put in and the likelihood number, and it puts them together and generates an overall risk. So I'll jump down to the bottom to point out there's a button to download a PDF of this report, and then return up here just to go through the charts very quickly. And when you use it, you'll get a chance to read in more detail. This gives you a sense of what that impact range is. It shows you the interquartile average, or 50% of the incidents will occur between this first quartile number and this third quartile number, between the 25th percentile and the 75th percentile. It gives you a sense of these are the values you should be thinking about in your sort of day-to-day. And then you need to look out here to the max and at least to the confidence interval high for thinking about tail risk and how impactful a ransomware attack could be. We divide the risk out into primary versus secondary losses. That is, productivity losses, response costs, recovery. You're going to have those no matter what if you have an incident. Legal costs, competitive advantage, and reputational impacts will only occur if people outside your organization, aside from your contractors and consultants, find out about the incident. We also split it so you can look at the difference between losses that came from confidentiality in the model and losses that came from loss of control of integrity and availability. We break it out by forms of loss here, so you can see the different values. You can see that in some cases, because this is synthetic data, we haven't really filled much in. You would presumably have a more consistent set of, or more filled out chart in this case. I wanted to jump to this as sort of one of the final 2 points here, which is the loss exceedance probability curve essentially says, how often in the simulations that were run did the losses exceed this value? So you can see here that we said it was 34% likelihood that you would have an incident. So there are losses beginning 34% of the time. But if you go down to like 2% of the time, the losses are at just over $4 million. So you could think of that in the terms of 2 versions out of 100 or 1 version out of 50 of the next 12 months in our simulation saw you have impact of over $4 million. That's really something you could communicate to leadership and say, is that something that we can tolerate? Is that something that we can sustain? Or do we need to mitigate that risk, offload that risk by transferring it through an insurance policy? And this is really a way of looking at risk that is something that the leadership, that business leaders and the county leaders are going to understand. Final point, the ultimate goal here is to be able to look at what controls will give you the best return on investment. Different controls cost different amounts to put in place, an endpoint monitoring system versus an MFA system, et cetera, et cetera. We don't know what the costs are. So the way this deals with that, it automatically ratchets up these 6 safeguards that are listed here at the bottom to the maximum level of implementation, and it reruns the simulation to see reruns the calculation of frequency to see how much you would lower your frequency if that occurred. So you can see that from that the frequency value had been 34% according to our previous calculation. If you ratcheted up all of these controls to their safeguards to their highest level, the likelihood would drop to 18%, nearly half of the likelihood would go away. That gives you a sense that the tools that you could buy, the practices you could put in place that would address these particular safeguards are the ones that would probably have the most impact on reducing ransomware. And with that, I'll turn it back over to Rita, and hopefully we have a little bit of time for some questions. What I am going to put on the screen now is just my name, email address, and if anybody has questions, they certainly can reach out to me.
Great. Thank you so much, Adam. And I know that was a lot to unpack. Before everyone goes, while I'm finishing up here, Brittany's going to post a poll similar to the chat question at the very beginning. We just want to categorize those that are participating today in terms of size of county and IT support. But that was a lot for us to hear in this last part, but great information overall. I know we don't have time for questions today. I'm just going to check the chat real quick. And this recording will be available, if not this afternoon, first thing tomorrow morning. And we will send it out to all of you that were registered. The reality is that we all have to be concerned and in some way address in a proactive fashion how to control the cost with cyber insurance. But more importantly, things like this risk management tool will help all of us, whether you're a county or not, protect your environment and cut down on the exposure that some of us may have for the hackers to get in. We have like 1 minute, and if there's a dying question that I see the question about size, the small, medium, and large. For me, small is less than 50,000 population, medium is 50 to 500,000, and then anything over 500,000 would be large. That's the kind of what we follow internally. Apologize, I didn't share that out originally. But it's the fact that we have all different size counties represented today that's important. And the problem is affecting all of us. And great question, Charles. The staff that should be contributing to this tool is going to vary. And Adam, correct me if I'm wrong, but depending on the business asset that you are putting in, you're going to need multiple folks weighing in different parts. So you made a comment earlier that it's not like a 5-minute task. It could take you a week or so, depending on your access to individuals. And importantly, asking consistent questions. I'm anxious as well to get a hold of the tool and start implementing it. And I do think that we will have a follow-up webinar, not just on how to use the tool, but we'll definitely make sure that we provide the opportunity for more training on that. We work closely with the Center for Internet Security. And the question is, Adam, I didn't know if you could post the link in the chat, if you don't mind, before we close out.
I will do that.
and then I'll make sure to share it in the email afterwards. Okay, Tim, Oliver, thank you so much for moderating today. And Robert and Matt, truly appreciate your input and comments and expertise. Tim, any closing words?
No, it's been a very beneficial session, and look forward to seeing more responses from the counties on this.
Yeah, and I appreciate feedback afterwards. Like I said, we'll send out a follow-up email that stay on if you'd like. If Adam can post that link in the chat to everyone, and then we'll make sure that the link, there we go. Well, Brittany's posting if you're not a member of Tech Exchange and you're a county, we highly recommend you join. We'll be sharing this on the Tech Exchange as well with information from the webinar today. So thank you again, everyone. Great attendance. I think we had over 90 attendees today, and we look forward to hearing feedback. And on the poll results, I didn't share that, but I am right now, and we'll be sure to include that in the follow-up email also. So thank you again, and take care, everyone. Have a great day.
Thanks, Rita.
Thanks, Rita.
Thank you.
Good to see you, Matt.